evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Wednesday, the 2nd of February, 2022, 6:40 p.m. Central Time. Well, what goes up got a correction in the evening trade. You can see what's going on, just all the stock indices down, and some down hard. 40 points in the S&P is big numbers. That's a $2,000 drop on a full-size, well, on the mini contract, if you trade the S&P, not full, on the mini. You're down hard in the Nasdaq. What's going on? The market was looking good. You had a miss in Facebook, and it's heavily weighted in those indices, and boom, away you go on the market. You're starting to see like PayPal, Spotify, a number of the companies are getting hurt. And then you've got the stellar performers. You can't shake off Apple. Apple carried everything to a high tide mark, but then they got to carry themselves. You're not going to have the Apple to carry you all the way through. Jobs markets. I've got to say, I just heard that in a fast pace, Home Depot is looking to hire 100,000 workers now, and they say that the pace that they used to hire at, in other words, the procedures you had to go through, are all sped up. You could apply for a job and have that job as fast as the next day. That is what you call getting things done. Interesting. So as I look behind me in the early evening trade, there's a lot of red on the boards, by the way. All the energies are a bit lower. OPEC is going to give you another 400,000 barrels a day in March. That doesn't mean they can deliver them. That's the goal. Pemex, I don't know if you get my full research. Tonight I'm writing a report talking about Pemex. In the past, they would take about 800,000 barrels domestic, and they would export the balance. So they kept, and they've been holding oil for a bit, and they went to a 32-year low on exports. They're a state-owned company. Apparently, Pemex executives told the government they could produce a lot more oil domestically and not have to go to the open market to buy gasoline, distillates, and the like. Phenomenal. They'll give up the sales abroad, which is a lot of money, and they'll do that. Turns out that they were given the wrong information. At best, they're still producing and using about 800,000 barrels, and they could have been exporting about 800,000 barrels. So now they've got to come back to the market. That weighs a little bit. I mean, each little bit helps. You're going to see the shale producers. They're going to all come alive. Big boys can't ignore $87 a barrel. I don't see how. They've done a wonderful job of taking the balance sheet debt down, but they've got to also take advantage of some of this price. That's what I think, at least. All right. On the S&P, you're getting a rally, and from the lows, we should actually do this. Here you were down at 264.75. You come back, you gain 0.76, and now with this, you've gained back another 2.5% at current prices. So you've made up of the approximate 10% that you dropped, a third of that. The resistance is waiting for the market on a closing basis, and that's what this is, at the 45.92 level. The market's not in an uptrend. It's still in no trend. It has, if you look at it, a higher high, lower low, and the bias is down. It's pretty easy to see. When we actually take a look at this chart and you go from 4,800 to roughly 4,200, if you step back and you say, well, what's half of that? And half of that difference is going to be 300 points. And if you put 4,500 on the chart, what do you have right there? You've made about a 50% retracement, which is often where a market starts running into problems. I mean, it's simple math. Understand what the market does. When I look at the swing line, we had a phenomenal run to the upside, and it's been very hard to get involved in the market because these moves are, number one, broad, they're large. Number two, they've all made higher highs, not a lower low. You're starting to get your first lower low tonight that you haven't had since back here 5 days ago, roughly. Where's the market stalling? I said yesterday I expect to see resistance as a chartist, that's all, between the 18 and the 100-day average of closes. Doesn't mean I'm right to be right for this past in the evening trade since 5 o'clock when it reopened, an hour and a half. But It's doing what I expected it would do. So now the market needs to go into what I think is going to be consolidation for a bit. That's what I'm expecting. Momentum up, trend up, bias up, and you're in near-term resistance. Doesn't mean you can't pick up and run, but the odds don't favor it. Let's go to the Nasdaq and take away tonight's action. If you, again, go here and let's say that 16,500 to 13,800, 700 point difference, add back from 700, what would that be? 350, right? So that would take you up to, if we add that, about 14, right in here, be about a 50% correction, right in that zone. Did I do that right? What did I say? I think I did this wrong. I said, you got to do it here, 16,500. So you really got 3,700 points. I knew something was wrong there, and you divide that in half, and you got about 800. 800 is 14,600, and add the other amounts I left. Right in here is your resistance, about a 50% correction. Just doing it, flashing it at you, okay? But what did I say? I thought that you were going to have resistance yesterday if you rallied at the combination of the 200-day average and the 18, and there's another event that bothers me. The way the math is going, you're going to drop the 18 under the 200-day average, which is a bearish crossover. You go today, and you didn't quite get there. The 18 is still 15,021 versus 1504, and tonight, this is, in fact, I'm a day off. This is today. The market crossed over. I'm wrong. I'm off a day here. So my days, I wasn't looking. That's Monday, Tuesday. Today is Wednesday. You got your bearish crossover. Is the market going to head to the 100-day average? It could, based on this. The trend is up. The bias is up. Where's your risk? If you're long, you got to have it under the... Well, you don't have to do anything. But as somebody that would look at patterns, I don't want it to get back under 13,831. And I am expecting that, you're in that resistance area. And tonight the market gives that up. So now we have another pattern. First, the 18-day is under the 200. The resistance is shown up there. The trend is up. The bias is down. And momentum trying to flatten a little bit. Okay. But this could also create a pattern where you start playing back and forth against these averages to get a base going in the market. The problem for the market has been you had this hellacious break and you haven't consolidated anything. And I think the market needs to do that. That is typical what goes on. Now, the Dow doesn't have Facebook in it or some of those other high-flying stocks. It has SoftBank and things of that nature, but doesn't have that. You still had your bearish crossover, and so far, it's had zero impact. The market's not paying attention. The other good thing about the Dow that the other indices don't have is now under it. You have three levels of support. You have the 100, the 18, and the 200-day average of closes. The market is in overbought territory, so I am expecting consolidation, but it is stronger than the other two charts we looked at, and the Russell can't even get up to the 18-day average. It's got a lot of problems there. We then get to the VIX, and I think you're at a zone in the VIX where you're entering the support area. You've fallen back, you stalled against the 18-day average, and now you're slipping back into the 100 and the 200 right under it, and you're already oversold. If we walk in the morning and the charts behind us are all green, well, this will probably go down. But if they stay red as they are, you'll probably get a bump back in here, maybe getting to that 18-day average. I'm going to repeat. I think we need some consolidation in stock indices. I expect churning and burning. In other words, not making money in the 30-year bonds. I think it's going to whip traders. I don't think they'll be followed through to the upside or to the downside. I think it's determined to go sideways here for a bit. That is consolidating. And let's face fact. This market fell apart. It needs a consolidation, and that's what I think it's doing at the long end of the curve. You're even doing that in the medium part, the 10-year. You do see that, how you're suddenly going sideways here. Now, the trend in this is a little different. It is up. Got higher lows, higher highs. It's stalling a little at the 18-day average. And again, I'm not looking for a big move. I think 128 and a quarter is a lot of resistance, and 127.10 is a lot of support, and suddenly you're stuck around 177 on the yield. In the dollar, you got up, you make your run at the upper Bollinger Band. Now, one of my favorite things is over the Bollinger Band, you only stay 5% of the time, under or over. It'll stay within them 95%. And I know there's mathematicians, and they've written me, and I agree with you. It doesn't mean the way I explain it. It has to stay, and it's going to be 5% always over the top, and that's when it breaks. But go out and count. Soybeans just broke the rule of staying more than 5 days over a Bollinger Band. I say you can't find and lead contracts 5 times in a year, you'll see that event. So for the one time it happens, what do I care? I know that I tell traders you don't buy over Bollinger Band, so it doesn't matter. It's extended, and that's the problem with the market, and I think that's where the pros, when you first time you hit it, they're taking money off the table. So now you get your little correction, and I know the Johnny-come-latelys, oh, here's my opportunity. It hasn't broken. I want to buy it. You're overbought. You're not supposed to, the way I teach charting, you don't buy overbought conditions. And if markets want to correct, what's the number they often correct to? The line in the sand. What's the line in the sand? I define it as the 18-day average of closes. Some people use the 20, some use the 21, but you'll see that shorter-term average. That's what a lot of traders use. And you tell me where the market went and what it's trying to do. Right now it's neutral. It is bullish still. You haven't taken out 95.40 and a half. I would look for support there, but my work has filters on it. If I'm bullish, am I buying an overbought condition? Now, when I say me, that's what I'm teaching you to be doing. That's what I do. I teach, run a brokerage firm, and do my own thing too. And as you can see, got to get under 70. Then I get interested. So tomorrow could be a day of interest in that. The flip-flop is true of the euro. 40% of the dollar index is made out of this. So the one thing you don't want to do is be long the dollar, short the euro. You know, be one or the other. Which one do you want? You're playing the dollar and the euro. And then go to the other currencies because their weighting's much smaller. And all you did is rally back up here. Now, talk to me, baby. Are we still oversold? Yeah, any reading under 30 is oversold. So tonight, the market's opened, it's no longer oversold. Do you really want to go into the European Central Bank meeting in the morning? You're going to have that. Ms. Lagarde will be speaking early on. She generally has a press conference, excuse me, around 7:30 a.m. It's widely expected she's going to stick with her plan that inflation, and it's hellacious there. Remember how the European Union counts on imports of oil. They're not as rich as America, where we could have been without the Biden administration staying very self-dependent in oil. Instead, we lost that because of the green that we want to do, whatever. I think we go back to being self-sufficient. Maybe we don't export oil. Maybe there's a blend you do there, and we protect ourselves as an economy. I have my own opinions, obviously, on it. But you look and you see where the market's at. I think the pros, do they want to go into the report? If they do, their stop's going to be over there, is my guess. They'll be looking to come back here. Eventually, there's a lot of school of thought that when the U.S. starts to raise interest rates, that will be the weakening of the dollar. The actual weakening, and other currencies will rise against it. You might ask why. We'll cover that another time. I understand it, but we'll cover it another time. In the British pound, you have tomorrow the Bank of England going to give you their announcement. Now, they are widely expected, unlike the European Central Bank, to do nothing. They're what you call live. A lot of people think they will go with another quarter-point hike, back-to-back, the first of the G7 countries to do it. Market is not trending going into it. You have a lower low, higher high. What if on the first challenge of the Bollinger Band you had gotten out of any shorts because you had lower highs, lower lows? You'd be looking pretty good, and you don't have a trend right now. Bitcoin. I've been saying Bitcoin is weak, and the reason is that in order to get back to the 18-day average, which I think it will do, the problem is at what level? it keeps falling every single day. So you're losing about $300 a day. Well, eventually when it hits it, but so what? This has not been a good market. And on the next break in it, if there is a next break, you'll be testing those that want to see if they can hold on. If you get down and you do that, you don't go anywhere, that's going to give a lot of people the idea it has sold itself out. On the other hand, if you do that and the market catches another selling wave, I'm telling you, who knows how deep? Important. Then we get to the Brent Crude. So in the Brent, we have a higher high, lower low. When you lose the red line closing at 79 or lower, it hasn't done it, that is when I think the market begins a correction. Could go to the 18-day average. Until that occurs, I think the pros are buying the breaks and popping. Now, I don't think they're popping against the Bollinger Band right now. I think they're using what's called a window envelope. In my morning subscriber, I show you that number. You can't always play for a Bollinger Band. There's another way to play with two numbers. A window envelope, which gives you also a resistance point and a support point, and it runs parallel to the 18-day average. Take my charting course. You'll learn all about them in that. In the WTI crude, are you going to lose the embedded reading? Well, if you do, you back off. Now, I don't think anyone was buying today because you made higher highs than you did yesterday. But on this break right now, by the morning, it'll be interesting to see if the market holds up. Again, I think the pros are using these pops in the market to take money off and using the breaks to buy until they lose the 79 reading. Same in the heating oil, still bullish as can be. And in that gas, you get up, you come back under, and away you go. But it's really been on a tear to the upside because it was going sideways so long. It's made its lows. That doesn't mean down the road it won't make new lows. I don't know. Right now, no, it's dead of winter. People need the energy. The Biden administration is asking everybody around the world that'll listen, hey, get natural gas ready, send it to Europe if they need it, if Russia cuts them off. Russia's not doing anything right now, I think, during the Olympics. That's their buddy. They don't want to take the TV time, and it's precious to the Chinese. There's no spectators now. So the spectators are the TV. Can you imagine TVs are breaking away all the time for the Ukrainian invasion if he does that? I don't know what's in the man's mind, but logic tells me he wants a buddy in China. That would be not the best of moves he could do. Timing's everything in life. We'll see if that's right or wrong and what he elects to do at the end of the day. We talk about this. You know, we have a futures trading kit, and this kit is so complete for what the average person needs to get a feel. First of all, different charting software packages we have. You can try them out through it. Number two, a lot of the brochures. There's tools there for the beginner and the sophisticated. How many of you know the 14 popular chart patterns and what they do? We present them. Do you understand money supply, the M1, M2? I don't think most of you do. Pivot points, you even know what they are and what the pros are using them for, and it's really popular. There's that cause and effect and what I said. I developed this when Volcker was the chairman of the Fed. And it talks about the velocity of money. And you'll hear it a little bit today, not as much. Guess what? I think you're going to hear more and more about it now, because where we're at with the inflation story, it's certainly not when Paul Volcker came in and you had runaway crazy numbers, but it's big. And on a relative basis, what used to work, you dust it off, you bring it out, and you say, hey, maybe that makes some sense. How do you get access to this? It's free. Just go to our website under free offers. You got it. Call my staff. While you're on the phone, they'll email it to you. You'll have it as you're talking with them. I'm Ira Epstein. You have a great day. I'll see you tomorrow.